The largest options expiration event ever has come to the markets, and what happens here will have big impacts. Will it be to the downside or upside? In today's video, we take a look at both the trader and investor's mindset of what is about to occur next. Also, what did the Federal Reserve have to say about markets as we approach all-time highs for semiconductors? Volatility spikes once again, and of course, we come into the worst two-week period of the year. But actually what happens in July may surprise you. Could there be a new leader in town when it comes to lending and finance? Let's discuss it all today. Stocks, commodities, and cryptos. There's a lot to get into. We'll see you very soon. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, we have a lot to discuss as usual. Big dark pool activities, macro, and of course, the key levels coming your way. But let's kick things off with the time of year that we're in, which is of course the back end of June. If you're not already aware, this tends to be the worst two-week period other than September back end of the year. And it is followed closely up by the best two-week period, which is the start of July. Oftentimes it looks like this, and according to the Stock Traders Almanac, since 1985, this is generally how markets have traded. Sometimes chop or even downward pressure on the markets, then rallying through July to get one of the better returns of the year. So could we be seeing a dip that Wall Street actually likes to purchase? Well, other than 2024, this is pretty normal. In fact, if you have a look here in July, you tend to see incredible gains. And of course, you often see in more recent years, maybe gains in June, but in previous years, declines, particularly 2022, which was a very nasty period. 8.91% lost in June, and a lot of that came in, of course, the back half. So why is all of this important? Well, it comes to the triple witching event. And if you're not aware of it, it's also known as quad witching. 21st of March, 20th of June, 19th of September and the 19th of December will be these big events of this year. And it basically means where all of the options expirations happen. And this one is the biggest ever. It seems like we say that almost every single time, but that's because it just keeps getting bigger and bigger and bigger. And this is basically leverage in the markets and heaps of people hedging. Now, I would say that because of what happened during March and April, we saw the biggest amounts of hedges come in. And that's why we have such a big options expiration. But it's not just what will happen here on the Friday of the session, it's also what will happen as people reposition on the Monday. And it could be that the Monday actually has more volatility in it than this Friday session indeed. And you can see here 6.5 trillion total contracts, triple witching right after the US holiday. So that's obviously a break in between. If you did celebrate that US holiday, hopefully you had a good time with your family and friends. And of course, dealers must reposition themselves. So this is quite a lot of expiration, and it will create some movements. You can see here on the latest net GEX charts here that the OPEX has quite a lot of expiration. And yeah, there's a lot of money that's going to be flowing around over the next two sessions in particular. Now, what does this mean for the period of June into July? Do we expect a sell-off? Well, if we drop a certain level on the S&P 500 we'll look at soon, then yeah, you'd have to expect the markets to flow down to a very particular zone. But remember what we've been saying all of 2025. We said this at the back end of 2024 on the channel. Remember to subscribe if you haven't already, if you're interested in this type of stuff. We suspected that this year would be chop. And the reason is because when you have excellent previous years, year one and year two, over 20% gains back to back, you tend to have a lackluster year three, and then usually a pretty good year four if the bull market continues. And there is a reason why this bull market may be continuing for now, and it has to do with technology. But let's have a look here at BlackRock's big calls, because of course BlackRock has a few things they're looking at, particularly 5 mega forces, which you may see if you pause the video down here. Demographic divergences, digital disruption thanks to AI, geopolitical fragmentation, futures of finance, which I think is a very important one. It says here, fast evolving financial architecture is changing how households and companies use cash, borrow, transact, and seek returns. Now remember, this year we're starting to see crypto AI and all sorts of new lending coming through, potentially through stable coins and other stuff. So this is a big move in finance, and it actually led to big sell-offs in MasterCard and Visa only over the last week. Transition to low carbon economy, that also is one of their 5 mega forces. So for BlackRock anyway, that's what they're kind of looking at. For us, we're basically focusing on more the flows and the structure. And if you actually have a look here, according to Citigroup, we're also seeing US economic data deteriorating in 2025. So the biggest issue here is going to be structure and flow. And what we'll be looking for is big key either distributions that look something like this towards the downside, or just continuous squeezes to the upside, which are based on usually pullbacks in time, which is something that we're seeing right now. Remember, the market will stay irrational for as long as possible to make as many people as possible look as stupid. So basically, markets can do whatever they feel like. They'll stay for a lot longer. And I always like the other comment that says, even if there is something out there, so there's a problem or a crack in the economy, it takes longer than anyone expects to finally show up as an issue. And I think for a lot of us out there, we've probably seen different things over time and we're thinking, how can this not be affecting the markets? And then eventually it does and you say, wow, I should have seen that coming. Well, it's not that you didn't, it just takes ages to show up. And in a special soon, we'll be talking about the commercial property market, which is starting to get even bigger in terms of a big problem. And will that end up causing an issue? Maybe. But do remember the commercial property market's been coming up as a problem now for the last 3 years. So it's in the 12 trillion plus range at this stage. US jobless claims creeping higher slowly. You can see here that this is a very normal thing to occur at this time of year. So again, if you see these kind of outlandish bad jobs numbers coming through, yes, it does tend to spike into the summer in the US. And then we see it kind of drop back down as people get hired up again. And I think this is what the Federal Reserve was really getting at. Now, in terms of the Federal Reserve board members and what they had to say, their main comments here from their projections for 2025 were lower economic growth overall, which probably is going to require some type of stimulus, higher unemployment, which also backs up with Goldman Sachs. Goldman Sachs believe that jobs numbers and growth in the economy is going to drop under 100,000 in terms of the non-farm payrolls. And we could be seeing higher inflation. Now, they're still concerned about that, but regardless, the dot plot still includes 2 cuts for this year. So we've got 2 more cuts this year. Obviously, I think Trump wants even more. And a lot of this is actually going to also come in 2026 when we see, the potential changeover of what's going on with the Fed. Tariff assumptions, median dot plot. You can pause the video here if you're interested in seeing kind of a quick summary of this June 2025 FOMC outcome. But at least to me, the big thing here is not so much what was said, it's whether we've seen a big movement in yields. And currently, we just haven't seen that. It's still 2 cuts, and the market didn't really have a huge effect on it. So while this is a great summary, it didn't really change too much at this stage. Now, what about gold? Well, we do know that gold and silver and Bitcoin have been the standouts of this year. I believe this is due to central bank purchasing, but also due to adoption of Bitcoin and geopolitical tensions. And of course, I kind of have said this for the last 2.5 years. We've talked about this together, that we think that this is probably not going to stop. And therefore, gold is now the preferred hedge by a lot of people in these markets. And that's why it's doing quite well. In terms of big losers, up until recently, we've obviously seen oil fall off a cliff. Treasuries have done nothing. These usually would do a lot more in these types of situations. And US dollar weakening and weakening and weakening. Although that is now a heavily shorted trade, the actual trend still is to the downside, and we've got that covered soon. What about the market? Can it climb higher even if it sells off now for a little bit? Well, the answer is generally yes. In fact, sector outperformance often tells us how markets are going to continue. According to this, the sector has outperformed, as in technology, 20 of 23 bull cycles, 87% since 1932. So if you had to have an argument of what the best sector to be in is generally technology, or I like to call it innovation. And yeah, if it's doing well, then the rest of the market usually claws along with it. So recently we've been tracking semiconductors in particular, because that's this huge part of the AI boom. And it's now at resistance, and it's been kind of sitting around this zone. If that breaks towards the upside, then we have to assume that the pain trade begins back onto the bullish side, even if you don't believe that the markets are worth this much. Remember, it can stay irrational longer than you can remain solvent. Trump to make Iran strike decision within 2 weeks. Now, this was expected to potentially happen within 24 hours. And of course, It didn't, and now it's 2 weeks. So I guess it's kind of like, always going to be sitting over the top of the market. And again, it could be used as a reason for markets to sell off. So you've got to keep an eye on these headlines. It seems to change all the time. Obviously, the pizza orders and all sorts of things are going to be tracked heavily throughout the weekend. And this is always the risk nowadays of running stocks and trades into the weekend, is that something wild could occur, and that's going to create a big gap through the Monday session. What about big trades? Dark pools, there were a couple. Now, we did see on the Wednesday close, because of course Thursday market was closed, we actually got one of the biggest trades we've seen in a long time for the Russell 2000. Was it a buy? Was it a sell? I guess we don't know yet. We'll let the market actually decide on that. But as you can see, often it does come where we build an accumulation for a while, and then that led to bullishness. Could this be another accumulation? Is it a sell? We don't know, but we will be watching closely. We also got another big one for Google, and these have tended to end up in, again, consolidatory kind of periods. This one was a sell. This one here, is it a buy? Is it a sell? We don't know yet, but we will be looking for the reaction. So do remember, these large trades help us to ascertain that this is an important area. And then now when we see the flow start to move, then we can say, we see what they're doing. First 100 days and beyond, we're now at 150 plus. So we're at that point that we would expect to be recovering back to the all-time highs. Funnily enough, that's exactly where we find ourselves in markets. We're about to now enter into the period of what happens next. Are we going to have that sell-off in June, rally into July, and then questionable August, September? Well, that is the question mark, and we're looking very closely at the signs here. Of course, all of us doing the work to find out what is possibly coming up next. And of course, we'll bring the data, we'll bring the flows, and more importantly, we'll bring those dark pool transactions. So what else has been happening? Well, we've got a pretty much vertical kind of cliff here, symptomatic of also the dot-com bubble. And really any new technology tends to drive up the markets. And remember, markets then absolutely go ballistic in that direction. Central bank liquidity, again, update on that, pretty firm, decent. The S&P 500 may show us the tell in the weekly close. So do remember, this is really rare. This is what we call a tweezer pattern. Now, we still don't have the close, so we don't know it's going to close as a tweezer. But this is a rejection from the highs, 6,050, which is a call wall. And then it's also another rejection from the highs, of course, a call wall. And if we close like this, then it's suggesting that flows are moving towards the downside and that we could move into the 5,800 area. And this 5,800 area makes a lot of sense to a lot of people. Firstly, it would be mean reversion. So that is the weekly 20 moving average, which is very, very good. It would also hit an anchored VWAP. It will also hit a demand or a support zone. And we've got a lot of technicals sitting at this area. Most markets do usually come back to mean reversion before even picking back up. So that is certainly an area that we are watching and paying a lot of attention to. But even over the last 24 hours, as the futures have been opened, they put pressure back on that 5,900, 5,920 zone, and we're unable to break below. So at the moment, the market is super neutral, maybe even a little bit bearish because of some oversold or overbought metrics. And it is trying to pressure to the downside, but it hasn't broken and closed below. So we can't really say we're going towards 5,800, 5,750 yet because we haven't closed below those areas. But this is definitely what we call a pit. And we usually expect pullbacks in time to occur around these zones because it is a market that is overbought. And it is a market that has come back into its previous big trade range. So effectively, it's trading in what was a very fair area. Even if the market does this and then it rallies up, that is going to be a really strong sign as it takes out this high that it's going to make an all-time high. And it's a really strong sign that the market wants to continue higher for a while. So that is very, very good for the bulls. For the bears, you guys probably looking for this. And then the question mark happens. Do we find bid here? I would think we do. This would be pretty much where hedge funds would now be saying, okay, I'm interested here and I'm interested here, which is the 5,600, 5,660. So these are the two pullback ranges. I don't think people could get too excited about further sell-offs just at this point, unless something really crazy happens. But realistically, at this stage, these are the two main levels. And of course, where we find ourselves at the point of this recording, which is a pullback in time. And do remember, previous situations, it's either been a bigger sell-off or it's been a pullback in time. And when we've taken that high out, it's been significant. Usually the market has moved up for quite a few sessions after that. S&P 500 coming into the OPEX. So this is the 20th. The expiration, of course, has tons and tons and tons of options on it, as you guys can see here. And we are trapped between the zone. 6,000 on the upside is the call wall. And we seem to have a lot of options between 59, kind of 50 area to 6K. So we're kind of trapped around there. Now you'll notice that when you go to the 23rd, which is the Monday expiration, you end up coming down to 5,800, 5,850. And this basically means that, of course, if the market is going to reposition, let's say, and go to the downside and close below, that 5,800 becomes a very good target for next week to actually see the markets to come down to. So certainly something we're watching. In terms of Tesla, it's exactly the same. Call wall, call wall, call wall. Until it's through 330, it's just neutral. And until Nvidia's through 145, 150, it's just neutral. And look at how this 150 strike is starting to come up. 27th here, so that's next week's options expiration. 150 is now massive amount of calls. If we do get through that area, what's going to happen? Squeeze. And at the moment, you would have to think the market is not going to want to go through 145 unless it's ready to push that 150 narrative and actually start to, really push above. And of course, that's going to lead to, you would have to think, semiconductors leading, therefore S&P 500 making an all-time high. So some important points here for the markets indeed. What about the VIX? Well, the volatility market did spike over the last week due to geopolitical tensions and everything else. We've then seen, of course, the US 30-year kind of floating underneath that 5%, so no danger zone from this yet. And we've seen bonds markets not really show any fear at this stage. So we're not seeing what we would traditionally see with a setup that gives you a much worse sell-off. We're seeing kind of like almost a market that doesn't seem to think there are risks. And while that can be worrisome, it's not there just yet. We're just not seeing it. US dollar came up to the daily 20, rejected it a little bit. Again, dollar's been strong. That's then led to some sell-offs in gold and silver that we'll look at in a moment, but it's still in a downward pattern. Now let's have a look at gold. You can see here gold is on that daily 20, which it's held many, many times. And we'd like to see it hold. And I'm not really bullish on gold other than just to hold the positions until 34.05 plus close. So I'm looking for that. Hasn't done it yet. We haven't found a bid. Now silver, it's taken a little bit of a dive after taking this new high. And what this is doing is it's really putting pressure back on this daily 20. Now it's not surprising that it's going to try to do this because it had such an epic run out from that, where were we down here? From that like 33 range all the way up. That was a huge run. So usually markets after huge runs will come back and they'll touch these daily 20s. And we're not quite there yet, but this will be a zone now I'm watching. We failed at this area in here, which is where I suspected we would find bid. And this is a good kind of reminder that when you expect bid, you have to see bid. And did we see it? Let's have a look here. So this is where I expected bid. I expected bid in two locations. Here, no trade, no bid was found. Here, no trade, no bid was found. So again, if this found bid and then failed, I probably would have taken a stop loss. But in this case, it just didn't happen. So it's a really good case for this idea. Patience, react, don't predict. If you want to find out more about that, I have to suggest you look at our day trading masterclass. It'll save you a lot in terms of being able to recognize markets that you want to be involved in versus ones that you don't. And one of the more advanced techniques that a lot of people don't do, they don't have this one over here, which is the hardest for us to learn. And they don't have the replication concepts, or you guys may not have this, to be able to then say, okay, I only want to be in these after we find bid flow. Remember, it's chess. You find a key area, you understand that this key area is super important technically, it's super important to positioning, super important probably to the biggest algorithms out there. But if you're not actually waiting for them to show you their hand, then you can get stuck in bad positions. So that one's pretty much a classic case of that thing occurring. US oil, I wouldn't be surprised still for it to hit 79 a barrel, although I think this is a dangerous trade. I don't think it's worth it anymore. The general rule is that it initially spikes, drops a bit. If escalation continues, it spikes back to the highs, if not a little bit higher, and then it usually drops again. That's what's happened over the last kind of 2 years. Now, will it continue to happen? So far, it's actually playing that book. Tesla, no new updates really, other than we've got news coming. I think there's an Austin event, robo-taxi, etc. That could push 330 plus. If it does, well, you guys know 330 to 350 based on options, and then maybe we get a squeeze. But for now, it's just consolidating, so there's no real move there. Nvidia, you can see here that the position is pressuring that 145 but hasn't broken through, and semiconductors are still sitting at that all-important resistance. So again, no breakthrough, no idea that the market wants to squeeze higher yet. And for a lot of bears, they're going to be positioning here saying, I think this market's coming down. We don't know that. We don't have a break to below. So it's very neutral level. This is where bulls will take profit, bears will really try to hammer the market, and the market will tell us a direction, hopefully very, very soon. Another thing that I've noticed is, of course, we saw Visa and MasterCard drop, and this is because of stable coins, and coin itself has been a bit of a beneficiary for this. Now, this is technically what they call a flag pattern. If you actually extrapolate this out, it takes you to a 360. Could this be a new, big move here in the crypto markets, as we're seeing so much interest in stable coins due to, of course, the new votes that have come through the Senate, I believe. So in this case, this is a pretty big thing here. Obviously, technical flows have improved. Coin certainly on the run here, and you'll notice that it's still off where it was in November of last year. And obviously, it's been a big step up since March, but most of these stocks have. I've also noticed, like what we mentioned weeks and weeks ago, probably about 2 weeks ago, that we thought that ARK and any hypergrowth stock was going to do well. And that has absolutely been where the flows are. So this is showing us that euphoria is back in the market. People are willing to buy companies that make no money again, and they are willing to buy the growth story. Now, this is very symptomatic of 2021, and just so happens that 2021 was the final year of that bull market rally. But again, timing will be everything. US 2K, big trade, no real anything. If you're still bullish, of course, this is fine. This is the inverse head and shoulders kind of right shoulder consolidation. We haven't really got a strong bid on that yet. And NASDAQ trapped like the S&P. You can see here, up, down, up, down, up, down. Keeps pressuring 21.5 or 450. Hasn't broken underneath. I'd be using the S&P 500 as the guide there. And nothing in crypto land. Ethereum, most traded zone. No changes. Okay, well, can't really do anything with that, can we? So we don't know if it's distribution or accumulation yet. And Bitcoin is the exact same thing. Most traded zone, no bid, no sell. Long leg dojis. The market is absolutely neutral into this OPEX. And I would expect maybe actually the Monday to be the more volatile day. But hey, shorter week this week. The Thursday was closed. I actually thought it was open for a second there, but it was closed. Of course, the public holiday. And this means that, in general, a lot more options need to be taken off as of Wednesday and, of course, Friday. And then usually it's the repositioning that can also cause vol on the Monday. So be careful out there, guys. Probably going to be some directional change. Let's hope there is. So, of course, some good trades can be put in. But we just don't see them yet. If you enjoyed today's video, remember to subscribe, guys. If you are in Melbourne, Australia, 2nd of July, a couple of spots open, not too much left now for the Melbourne trading event, completely free, drinks provided. Come out, see us, learn some stuff. I'll be sharing some things that I don't share anywhere else, so that'll be awesome. And it's a great event. Also, come and check us out over on Twitter X so you can see some of the charts that we've shared today. Guys, things are just getting heated for 2025. It continues to be what we thought it was, which is a very volatile market, and I don't expect that to go anywhere. So remember to subscribe to the channel if you enjoy this type of content. We love doing it. We really appreciate each and every one of you. And we'll see you in the next episode. Bye for now.